Welcome to Solidarity Spotlight, the place where we share with you bleeding-edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The cryptocurrency markets opened with cautious optimism, as Bitcoin ETFs demonstrated remarkable resilience, with $301 million in net inflows on September 3rd, signaling sustained institutional interest despite recent market volatility. This substantial inflow represents a significant vote of confidence from traditional investors, particularly as only ARK Invest and 21 Shares ARKB posted outflows, while the majority of ETF products saw continued capital allocation. The market impact of these flows extends beyond mere numbers, as institutional adoption through regulated vehicles continues to legitimize Bitcoin as a strategic asset class. Bitcoin's price stability around the $110,000 to $112,000 range demonstrates the maturation of the market, where large inflows no longer trigger extreme volatility, but instead provide a stabilizing foundation. This development suggests that Bitcoin's correlation with traditional markets may be weakening, as evidenced by the declining DXY correlation of negative 0.25, potentially positioning cryptocurrency as an independent asset class during periods of monetary policy uncertainty. The infrastructure transformation taking place across blockchain networks reached a pivotal moment as Polygon officially executed its long-anticipated migration from MATIC to Pol tokens. This upgrade represents far more than a simple rebranding, as Pol introduces enhanced utility features including EIP 2612 permit functionality that streamlines transaction approvals and reduces gas costs for users. The migration's seamless execution across multiple networks, including Ethereum mainnet, Polygon POS, and ZK EVM, demonstrates the technical sophistication required for major protocol upgrades in today's multi-chain environment. Market participants should anticipate increased developer activity on Polygon as POL's enhanced feature set attracts institutional builders seeking modern token standards. The introduction of a fixed 2% annual emission rate for the next decade provides predictable tokenomics that institutional investors favor, while the governance mechanism empowering POL holders to adjust future emission rates creates long-term alignment between token holders and network development. This upgrade positions Polygon favorably in the competitive Layer 1 landscape, particularly as the network prepares for its role in the broader AG layer ecosystem, where POL will serve crucial cross-chain functions. Solana's blockchain evolution took a dramatic leap forward, as the community voted overwhelmingly in favor of the Alpenglow upgrade, with 98.27% of participating stakers supporting the proposal. This upgrade introduces revolutionary consensus mechanisms through Votor and Rotor components that will replace Solana's existing proof of history and Tower BFT systems. The technical implications are profound, as Votor promises to reduce transaction finality times from over 12 seconds to approximately 150 milliseconds, while Rotor will optimize data transfers between validators to enhance scalability for high-demand applications. The market impact of this upgrade cannot be overstated, as faster finality times position Solana as the premier blockchain for high-frequency trading, gaming, and real-time financial applications. With 52% of the network's total stake participating in the governance vote, the upgrade demonstrates robust community engagement and decentralized decision-making. The implementation timeline suggests that Solana will gain significant competitive advantages in DeFi and Web3 gaming sectors, where microsecond improvements in transaction speed can determine user experience and adoption rates. The decentralized finance sector experienced explosive institutional adoption as total value locked in DeFi lending protocols surged 72% year to date to reach $127 billion. This remarkable growth stems from the integration of real-world assets as collateral, with platforms like Aave Horizon enabling borrowers to tokenize private credit, real estate, and government bonds to secure stablecoin loans. The institutional appeal of these platforms becomes evident when examining the growth rates of specific protocols, with Euler experiencing 1,466% TVL growth and Maple Finance seeing 586% increases as they cater to institutional borrowers seeking tailored lending solutions. The market implications extend far beyond current metrics, as tokenized private credit now represents $15.9 billion of the $27.8 billion in real-world assets on-chain, followed by $7.4 billion in tokenized U.S. Treasuries. This trend suggests a fundamental shift in how institutions view blockchain infrastructure, moving from experimental pilot programs to core treasury operations. BlackRock, J.P. Morgan, and Franklin Templeton's active participation demonstrates that major financial institutions now recognize blockchain's potential to streamline settlement, reduce counterparty risk, and unlock previously illiquid assets. September's token unlock schedule reveals a massive $4.5 billion worth of vested tokens becoming available to investors, project teams, and other stakeholders. The composition of these unlocks provides crucial market intelligence, with $1.17 billion coming from cliff unlocks and $3.36 billion from linear unlocks, suggesting a more measured release pattern that may reduce sudden supply shocks. SUI leads September's unlocks with over $153 million in tokens scheduled for release, despite having only released 35.1% of its total supply, indicating significant future liquidity events. The market impact varies dramatically based on unlock structure, as Fast Token's $90 million unlock represents a smaller relative increase given that 96% of its tokens are already in circulation. Arbitrum and Aptos face substantial unlocks of $48 million and $50 million respectively, potentially creating selling pressure for these Layer 1 and Layer 2 networks. Investors should monitor these unlock schedules carefully, as historical data suggests that large cliff unlocks often precede temporary price volatility, as early investors and team members may choose to realize profits. Layer 2 infrastructure development faced both challenges and breakthroughs as Starknet recovered from a significant 2-hour outage following its Grinta upgrade implementation. The disruption occurred despite ambitious improvements, including a transition from single sequencer to 3-node Tendermint consensus, near-instant pre-confirmations, and EIP 1559 inspired fee mechanisms designed to increase throughput by up to 7 times. The market's response was swift, with Stark token dropping approximately 5% to trade near 0.23 as investors absorbed the stability concerns. However, the network's rapid recovery through chain reorganization starting at block 1,960,612 demonstrates the maturity of incident response procedures in modern blockchain infrastructure. Simultaneously, Silent Data emerged as the first privacy-focused Layer 2 to join Ethereum's superchain, offering enterprises the ability to run blockchain applications without exposing sensitive data through trusted execution environments. This development addresses a critical gap in enterprise blockchain adoption, where privacy and compliance concerns have historically prevented large-scale implementation. The integration with established partners, including Shell and Archax, suggests that privacy-preserving blockchain solutions are transitioning from theoretical concepts to practical business tools. The conclusion of Ripple's prolonged legal battle with the SEC marked a watershed moment for cryptocurrency regulation, with both parties dropping their appeals and effectively ending the case. The influence of the XRP community, often called the XRP Army, proved decisive in the outcome through organized efforts, including over 75,000 holder affidavits and regulatory inconsistency documentation that directly influenced Judge Tora's ruling. This grassroots legal strategy established important precedents for how cryptocurrency communities can participate in regulatory proceedings, potentially inspiring similar organized efforts in future cases. The court's nuanced distinction between institutional and exchange XRP sales provided crucial legal clarity that positions XRP as a legitimate cryptocurrency rather than a regulated security on exchanges. The market implications extend far beyond XRP's immediate price impact, as this victory strengthens the legal foundation for other cryptocurrency projects facing regulatory uncertainty. The case's conclusion removes a significant regulatory overhang that has constrained institutional adoption of XRP, potentially opening pathways for XRP ETF products and broader integration into traditional financial infrastructure. The Circle's aggressive expansion of USDC adoption through partnerships with MasterCard and Finastra represents a strategic push to embed stablecoins into global payment infrastructure. The MasterCard integration enables acquirers and merchants in Eastern Europe, the Middle East, and Africa to settle transactions in USDC and Eurocoin, with Arab Financial Services and Easy Financial Services becoming the first adopters. Finastra's integration of USDC into its global PayPlus platform, which processes over $5 trillion in cross-border transactions daily, allows banks in 50 countries to settle international payments in USDC while maintaining fiat-denominated instructions. These developments signal stablecoins' evolution from crypto-native tools to mainstream financial infrastructure components. The market impact extends to the broader cryptocurrency ecosystem, as increased USDC adoption creates demand for blockchain transaction capacity and validates the utility of digital assets in traditional commerce. Circle's systematic approach to geographic expansion, following recent partnerships with OKX and meetings with South Korean banking executives, suggests a coordinated strategy to establish USDC as the dominant global stablecoin. Wednesday's mining operations continued their expansion despite increased network difficulty, with companies like Riot Platforms and CleanSpark reporting significant production increases. Riot Platforms mined 477 Bitcoin and sold 450 in August, maintaining holdings of over 19,309 Bitcoin, representing a 92.7% increase year over year. CleanSpark demonstrated even stronger growth, mining 657 Bitcoin and selling 544.5, up 37.5% from the previous year. These metrics become particularly impressive considering that Bitcoin mining difficulty increased 44.9% since 2024, suggesting that demand and institutional interest continue growing despite operational challenges. Kango Inc. reached a significant milestone, surpassing 5,000 Bitcoin in treasury holdings with 663.7 Bitcoin mined in August alone. The company's strategic focus on long-term Bitcoin accumulation rather than immediate sales aligns with MicroStrategy's approach and suggests increasing corporate confidence in Bitcoin's long-term value proposition. The expansion of mining operations provides crucial network security as Bitcoin's value increases, while the hoarding behavior of mining companies reduces available supply and potentially supports price appreciation. Real-world asset tokenization reached new heights of mainstream acceptance, as on-chain RWAs surpassed $25 billion globally, with tokenized U.S. treasuries exceeding $6.6 billion. This growth reflects institutional recognition that blockchain rails can improve settlement efficiency, reduce counterparty risk, and unlock previously illiquid asset classes. Franklin Templeton's on-chain funds and BlackRock's Boodle demonstrate that blue-chip asset managers can operate real assets on programmable ledgers without compromising fiduciary responsibilities. The convergence of payments and RWAs through PayFi systems where invoices, settlements, and tokenized assets flow together as programmable finance represents a fundamental shift in financial infrastructure. European and Asian regulatory frameworks, including MiCA, Hong Kong's guidelines, and Dubai's progressive stance, are creating competitive advantages for jurisdictions that provide clear rulebooks for tokenization. The US appears to be following rather than leading this trend, as evidenced by the recent Genius Act providing federal framework for stablecoins, but arriving after international competitors had established clearer guidelines. MicroStrategy's continued Bitcoin accumulation strategy reached new milestones as the company, now operating as Strategy, qualified for potential S&P 500 inclusion after reporting exceptional Q2 2025 results. The company's holdings exceeded 628,900 BTC as of August 11, 2025, representing approximately 3% of all Bitcoin that will ever exist and valued at nearly $76 billion. The transformation from enterprise software company to leveraged Bitcoin proxy has proven remarkably successful, with the company reporting $14 billion in operating income and $10 billion in net income for Q2 2025. Management's guidance for full year 2025 includes $24 billion in net income and $80 in diluted earnings per share, assuming a year-end Bitcoin price of $150,000. The potential S&P 500 inclusion would mark a historic moment, as it would be the first Bitcoin proxy company in the prestigious index, potentially forcing index funds to gain indirect Bitcoin exposure through their strategy holdings. The broader cryptocurrency derivatives market continued its explosive growth, with estimates ranging from $20 trillion to $28 trillion at 2024 year-end, dwarfing the spot crypto market in volume. Perpetual futures have dominated this growth, taking over the lion's share of crypto's global trading activity. The U.S. market's evolution under President Trump's pro-crypto administration, including executive orders establishing strategic Bitcoin reserves and digital asset stockpiles, suggests that American derivatives markets are positioning themselves to recapture market share from offshore competitors. The CFTC's Crypto Sprint initiative and collaboration with the SEC to facilitate trading of crypto spot contracts on regulated platforms indicates that institutional-grade crypto derivatives products are rapidly approaching mainstream adoption. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.